Sparkle's on a vacation far away. Come along and talk it over. We got so many options to trade. We better get it started. That's why we got to get started here on a Sunday. It is Sunday, March 12th, 2023, 4:13 p.m. 4:13 p.m. on Sunday. And old Sparkle is her and Coco, Sparkle and Coco, they're down south of the border, Playa del Carmen, soaking up the sunshine, while the rest of us are up here in the cold in the farm fields of Valparaiso, Indiana. So I wanted to run something by you, see if you are thinking the same thing, see if you think it's an interesting play. But in all my lameness, Kid 3, he spent the night at one of his buddy's house last night, and Kid 1, she was working, so I was just here holding the fort down by myself in the basement. I was watching Drive to Survive, the Formula One documentary. Love that show, and that actually got me into Formula One. I had never watched an actual race before in my life, and now have been following it religiously since 2020. Oh, with my guy Max Verstappen. So I'm sitting on the couch. The laptop is, it's literally in my lap, and I'm going through tipranks.com. Okay, tipranks.com. Clicking on the old research tools, going down to the dividend calendar. Let's see who's coming up on X dividend, just in case we need to check them out. So I went into, let's see here. I think it's Monday, right? I think it's Monday, but no, it wouldn't be Monday. Couldn't be Monday, because we would need to have already owned the stock to get in on this for Monday. No, here it is. It's right here. So it would be Wednesday, March 15th. And this is literally what I do for fun. That doesn't sound like fun. Doesn't sound like fun, but I just click my way on over to the tip ranks, go to the research tools, down to dividend calendars, and then I see who's coming up on X dividend day, because we know that in order to get paid that sweet dividend, you have to own the stock the previous day, the previous business days. Or I should say, it could be that morning of X dividend, but the purchase must have been settled. And sometimes it takes a day or two to settle these trades, sometimes 3 days. So here's what we have. I was scrolling through here, and of course, I'm a sucker MC. So I'm looking at the dividend yield, right? So I look at dividend yield. What looks interesting? Yeah, that looks interesting. Oh, it's Canadian. Oh, Canada. So I don't mess with that, because you have to pay their taxes then, like immediately. I'm not doing it. I pay enough of my own taxes here. Coterra Energy, we love them, right? But we already have some plays in action. We have a couple of Wheel of Fortune trades going on with Coterra Energy. And then I looked at this one here. Okay, so a couple of things. I'm looking at yield, and then I'm looking at, what do these guys over here at Tip Ranks say? And they're saying, hey, strong buy. And then, of course, that yield on the dividend. Hey, isn't that a dividend trap? Yeah, it can be. It certainly can be. EOG Resources. So I started looking at the E to the O to the G, went over to Alpha Spread, and they're like, hey, Bart, I'm telling you, they're underrated. They're underrated right now. They're undervalued by 20%. So, of course, we like the sound of that, don't we? Then we go over here to our friends at Seeking Alpha, and this is the part that got me all excited last night when I found it. So if you look down here, this is, okay, so if you go to seekingalpha.com, okay, put in the ticker symbol EOG, or whatever you're looking at or looking for. So EOG, I already had it up. So let me go to what would come up. So the summary would come up first, okay? So it would show you all the different charts here. And over the last year, they're down about 2%. I like to look at like a month. So they're down 15%. So that is either terrible or it could be, hey, that's a bargain. Could have a sweet valuation. And the authors over there say it's a buy. Wall Street says it's a buy. Then the propeller heads say, hey, not bad, 3.17 out of 5, but we're calling it a hold right now. So you see what what they did Friday. Most stocks went down on Friday. They lost 2.5%, which was $2.82 on their share price. You got a lot of, I like to scroll through and just see what some of the headlines are on the articles that the authors over there write. And I'll read a few of them. And then what I really like to do also is I look at the comments, because there's a lot of very smart comments that go on inside of Seeking Alpha. And of course, it's a playground of people behind computers. So there's also some funny business and some, not so nice comments made as well. But I like to read through the smart comments and look at what these guys that know way more than I do. These are people who are, just likely more intelligent than I am. What do they have to say about it? A lot of them like it a lot. So we go over to dividends here. Okay, so we click on the dividends, and you'll see that it shows, hey, that just says 2.94%, but over there on the tip ranks, it said that it was a 7.91%. So what gives, Bart? What gives? Well, let's find out. That's what I wanted to dig into. So, and then it's saying, wait a minute, this says X dividend date of April 23rd. And tip ranks was telling me that it is March 15th. So again, we've got some investigating to do. So then I click on dividend history. So on this line of these tabs, once you're in this dividend scorecard, that'll be the first screen that comes up once you click on dividends. So dividend scorecard, you go over to dividend history. I don't know much about history, but I want to learn about EOG. So if you look over here, consecutive years of dividend growth, that's a great sign. They've had 5 years in a row. Okay. Consecutive years of dividend payments, 23 years. I mean, that's as old as my oldest child. So that's a long time. Then we look down here, and this is where I got so excited. I'm so excited. And if you look, so you do have this dividend here, X dividend of 315, which matches up with what tipranks.com says. And then lo and behold, it's a special. It's one of them special dividends, and it's a dollar bill. It's $1 per share, which is higher than their regularly scheduled quarterly dividend, which is currently at 82.5 cents per share. So I was thinking, how can I get in on this? Man, I want some of that. So I looked at, oh, wait a minute. Then the following one is less than a month later on the XDiv. So if we buy this tomorrow, on Monday, March 13th, so we'll be locked in for this dollar dividend, right? But then what if we immediately sell the covered call outside of the next dividend date of April 13th, and we catch two dividends? Okay, so we would be at $1.825 per share, right? So we'll get the abacus out in a second and do some sweet math and determine where we at. But before we do, let's go up to this stock analyzer right here, the stock valuation spreadsheet. Let's get the old spreadsheet out. And there it is. EOG is in there, currently showing a share price right here of $1.1218. Okay. It's been down on the moving averages, 20-day, 50-day, and 200-day. Now this is showing that low dividend yield. And the reason is because the formula that's plugged in here is based on their quarterly, which would be their fixed dividend, right? The special dividends aren't factored in. So that makes it way more interesting, doesn't it? So if we look down here at this in the bottom right, analysts have this targeted at 150, 155. We saw our friends at Seeking Alpha had it at 140, 140. Either way, that's higher than what we're hoping to pay for it tomorrow. Now, we have no idea what this will open at tomorrow. We have no idea what the stock market is going to do tomorrow. I know financials are probably going to take it on the chin again. So we're going to be looking to make a play on that as well. But right now, what does the EOG say? If we go over to Graham's valuation, okay, E equals MC squared, all this kind of things. This was his original formula. This was his updated, revised formula, okay? Is that, who is that? Benjamin Graham guy? Was that Benjamin Franklin's brother? No, it wasn't. This guy, Benjamin Graham, he invented the graham cracker. So if you look at what his formulas say, and both of them say the same thing. They say, if we look down here, buy or sell. They both say buy, okay? And this, there you go again, laughing. What in the world? This says it has an intrinsic value of $477 a share. So that's, it might be a little more exciting than it is or should be. But if we look at what they're doing on the discounted cash flow model, this shows that it should have a share price, if you can see that right there, $340.22. And currently it's at the 112.18, which is a difference of over 200%. How about that? What else would we want to look at? The dividend discount model, multiples. Let's see what the multiples say as far as what it compares to. So if you look at the, this isn't a good comparison. Let's get back over here. Let's go back over here to the stock screener and then get back to the business. So everything that I look at fundamentally says that, it's not a raging steal because the market is very uncertain right now, and it is an energy stock. And I know I love those energy stocks, but they can be cyclical. They move up and down all the time. So if we look at the beta down here, you see the beta is 151. So that is 51% higher beta than the average stock. So the average would have a beta of 1. So that would be considered like the baseline. Above it means this stock is more volatile. Below it means it's typically more of a reserved stock. Pardon me. Do you happen to have any Grey Poupon? I don't, but I do want to get in on this EOG. So let's do a little math, make a little love, get down tonight on the EOG. So if we go back to these numbers, so we're looking at $1 and then 82 cents per share if we want to capture both of these dividends, like do a back-to-back jack on those. So that would give us 1.825. So you see the little half cent right there. We'll take it. If it's a half cent more than I had earlier. So if we look at that, and then we also went to our favorite thing, which is the Robinhood, right? Let's go to Robinhood and just see what's up with the premium. If we look at the premium on EOG, you down with EOG? Yeah, you know me. We're going to try to make a comeback from that $15,882 that we lost on Friday. We've taken it on the chin over the last month. The market has just been hammering us. So EOG resources. Let's see. Now these premiums are not going to be what they are going to be tomorrow. That part we don't know. This is essentially how it ended on Friday. Okay, so in order to collect the premium, to collect the dividend on both rounds, okay, we want to collect both rounds of this dividend. So we'll buy the stock tomorrow, and then we'll sell a call out past this April 13th ex-dividend date, because if we own it through that day, okay, we will qualify to be paid the dividend on the 28th. And we don't need it. We don't have to own it on the 28th in order to qualify. We just have to qualify right here and right now, April 13th, right? So we want to collect both of those dividends. And what can we get for doing that? Like, how would we be rewarded? So let's look out on the chain here, on the chain gang, on the dividend chain. Now, we could roll the dice and take our chances and go with this April 14th, but that's too close to that 13th, and I don't want anything to change on me because I want to collect both dividends. So let's go out to the 21st. That'd be 40 days out, okay? So say this opens at, what we'll do is we'll go ahead and round up for now. Say it opens at 113, or it's $113 a share tomorrow when I make the purchase. That's the number we'll use for the math, 113, okay? So if we go out to this date and we sell the call at $4.80 a share credit, that would be $480 bills, right? That we would attempt to put into our pocket. And of course, the max loss, they say, is unlimited. That, of course, is that's not true. I mean, it could go down to zero, but that means it would be limited to going from what we paid for it down to zero. And I'm doubting that this company that has a very nice track record is indeed going to zero. So $480, okay, collected. So we would have $480 for the premium, and then we would collect the difference between what we pay, which we're saying is 113, and then this 113.50. So we would collect 50 cents per share times 100 shares. That's $50 bills. And then we're going to collect both of those dividends in the meantime. So it'll roll around and we'll get paid on the 30th, $1 a share, which will be $100. And we'll get paid again on April 28th, which will be $82.50. Okay, so that's $182.50 that we are going to collect on this investment. Okay, so it would be 100 shares at $113, which is $11,300, right? Let's check your math. 100 shares times a share price of 113. So that's $11,300 invested, right? And then in the meantime, we're going to try to collect that $480 premium. It could be much lower tomorrow. We'll find out, and I'll certainly do a bit of live video. We'll do it live. We'll do a live video. Then we're going to have $50 in share appreciation if those shares are indeed called away at the strike price, because it's a contract between me as the seller of the contract, and I am committing, I swear to you, I do declare that I will sell you these shares for $113.50 on the date that we choose, which of course would be that, what was it, April 21st? April 21st. I tell you, I will. And that is me giving them my word that I will sell the shares to them for $113.50 on April 21st, regardless of what the price is. It could be $120 a share. I have committed to sell them for $113.50. And then the buyer on the other side, what they do is they have the right but not the obligation to buy those shares. So it could come all the way up to $113.50, and they could choose to buy them or not. They don't have to. So that's the difference between the buying side and the selling side of these option contracts. I am locking it in, and the advantage to me is I leave with the $480 no matter what happens. So if the stock goes down from the time I buy it and from the time I sell the call option, if it goes down to 110, then nothing happens on my end except I still have $480, and then I still have the 100 shares, but the buyer does not have an obligation to do anything. So hopefully that makes sense. So we have $480, right? And then we add $50 to that, and that would be the appreciation between the 113 that we pay for it and then the 113.50 that we sell it for. So 50 cents a share times 100 shares is $50, and then also collecting both of those sweet dividends, right? And the total of those would be $182.50. So we end up with $712.50, and then we have to divide that by the investment we made when we purchased the 100 shares at $113 a share. We have to purchase at least 100 in order to sell one option contract. So each contract is always 100 shares. It's a 100 share block. So we divide the 712.50 by our investment of 11,300, and then we get 6.3% return, okay, on our capital. So we invested the $11,300, and then we received 6.3% return, which was the $712.50, and we did it in it took us about 40 days, so just over a month, to try to get that return. Now, the downside is there's no guarantee to that. The guarantee would be the $480 that we got for the premium, and then the dividends. Those would both be guaranteed, but the share appreciation is not guaranteed, because again, it could plummet down to 110, it can go down to 100, the sky could fall. All of that becomes where Robinhood says that my risk is unlimited, my max loss is unlimited, okay? Because theoretically the stock could go down to zero. It probably won't, especially during the 40 days, which is what we're going to be looking at. So I just wanted to drop by. I've said way too many words in this example, but I get excited. It's a Sunday. thought I'd check in with you early before the week starts to let you know one of the Wheel of Fortune plays that we're looking to make starting tomorrow when that market opens up. Now, probably, well, you know what, Sparkle's out of town, so I probably won't be at the gym in the morning. I'll probably just wait for kid 3, and him and I will work out together. Just talking out loud. So I might be ready to roll when the market opens, and we'll see what goes on because I'm very, very interested to see what goes on with the financials, the financial market. I mean, I should say the financials sector of the market. So we'll be looking at Signature Bank, which just like almost got knocked out on Friday. I'm going to be looking at Citigroup because I got a couple of 50 calls on the table, and it's already under. Should say I got a couple of 50 puts on the table, which of course obligates me to buy the shares for $50 bills per share, and it's already under that number. In fact, let's take a look over at thefinance.yahoo.com. Yeah. And let's see, it's like about $48, I would say, is Citigroup. City, you see what comes up, the ads, because I love baseball cards. So it's like, I know how to get them. Let's show some baseball cards. So it closed Friday at 48.34. Currently, I'm on the hook for $50 a share. So we'll watch what the financials do. So they can easily drop some more on Monday, Tuesday. They can drop all week for all I know, or they could have a bounce because they're being caught up in the vortex of that. A couple of those bad banks, Silvergate and the Silicon Valley SV Bank. Both of those are taking it on the chin. In fact, SV has been taken over, and the government will probably bail them out, or there'll be a white knight come in and buy them for pennies on the dollar and roll them into their bank as well. Because as we know, the rich get richer, don't they? And we're just trying to rub two sticks together and get $50. So we'll continue to rub those sticks, won't we? Yes, we will. We definitely will. So that's what I've got for you. Thanks for tuning in. I appreciate it very, very much. Let's go back to, hold on. Let's go back. No, let's not. You've said enough in this video. Okay, I'm going to let you go. That's what we're looking at. EOG Resources doing the Wheel of Fortune trade. We will do that live tomorrow, see what happens. We'll track all of these Wheel of Fortune trades in a spreadsheet, show you what's up. I'll probably have a credit spread on SPY tomorrow, although I'll give you my take on my experience so far with the credit spreads on the SPY. And we'll go from there. And until then, you have a great day, my friend.